Yeah, you can just start whenever you want.
Okay. I'll just wait for the door. Did you hear Jazz? She just went, we've been waiting. So creeper. Okay, ready?
Okay, I'm gonna do that one and then.
Okay.
Oh wait,
Wait, no.
wait, no. It's right. So you're ready. Go.
In year 17, we wanted to ensure that we lowered our wholesale segment prices. However, some of our other goals were to maintain our profit margins and increase our advertising budget. If possible, we were going to upgrade our plans, purchase capacity, increase our rebate offers, and increase shipping time. We used to have 1 week shipping time, but it became too costly for our company, so we wanted to increase it to 2 weeks. In year 17, what ended up happening, all of our branded market shares increased. We had more capacity purchased in North America. Our 10-year loan that we took out was paid off. Our rebate offers increased by $1 in all markets, and we saved on shipping costs. Oh wait, I can't see it. Wait, let's start over.
Okay.
Okay. Why are my eyes so blurry?
Do you want it like that or?
Like that. I think maybe you should click this first before that, right?
It doesn't
Just
matter.
talk.
Sure.
Okay, let's do that. Okay.
I did it.
You did? That was fast.
I know I'm fast.
I am too. I think we've had this conversation before.
Yeah, I think so.
Deja vu. Okay. So our goals and expectations in year 17 were to lower our wholesale segment prices, maintain profit margins, increase our advertising, and upgrade our plans if possible. We also wanted to purchase capacity, increase our rebate offers, and increase shipping time because it ended up that 1 week shipping became too costly for our company. However, what actually happened were some strengths and some weaknesses. Our strengths included all branded market shares increasing. We purchased more capacity in North America and actually paid off our 10-year loan. We also increased our rebate offers by $1 in all of our markets and saved on shipping costs by increasing delivery time, as spoken before. However, some negatives of year 17 were that our operating profit margin decreased for the second year in a row. We had a major inventory shortfall in Latin America and a minor one in Asia, and we actually had a large amount of excess inventory in Europe. We lost internet market shares. Year 18, our expectations were to try new strategies to shake things up a little bit. We noticed that other companies seemed to be doing exceedingly better while we kind of stayed in the same area. So we increased retailer support and we wanted to purchase large amounts of capacity if possible. We also wanted to focus more on celebrities. In past years, we noticed we kept being outbidded by other teams and actually being outbidded by the same teams. And as we searched through their history, we realized that they were about the same amount. So at this rate, we noticed how much we needed to bid in order to win a celebrity. And we also wanted to create a safety net of inventory to capture consumer demand. Some strengths of year 18 were that we moved back to third place. We exceeded investors' expectations in 4 of 5 areas. We had large capacity purchases and we improved retailer support. So that increased our market shares, and we upgraded to plan option C. However, we had some pitfalls. We were lacking celebrities. Our strategy ended up not working out, and our internet sales were starting to decrease. In year 19, we did have a successful year in year 18, so we wanted to build on that year by increasing our advertising, but not making any major changes because we did end up having a successful year. The results, we actually moved to second place, and so we continued our positive momentum from year 18. Our stock, EPS, and credit score were well above investor expectations, and we purchased more capacity, so our goal was to block companies from expanding. Inventory was still an issue for us though in year 19. We still fell short in inventory, and the first time in the whole game we did not have any endorsers. In year 20, our overall goal was to end the game on a positive note. We wanted to spend a lot on celebrities since we did have the ending cash to spend that money, and we wanted to maximize our advertising spending. What ended up happening was that we bought up all the North American capacity remaining. We had 2 celebrities, the first time in the game where we had more than one. So our strategy, which ended up poorly in year 18, worked out for us in year 20. And we ended the game having top segment in terms of internet and branded shares. We were beyond investor expectations in that realm. However, our ROE dropped substantially, and we dropped to a spot to finish in 3rd place overall. In the end of the game, we decided to use a management buyout decision. We felt that that was the best decision for us because we still wanted to have claim in this relatively successful company, and because in the management buyout decision, we end up being shareholders. We did not want to be a public company like the IPO decision. We felt more like being a private company worked out well for us in the past 10 years, and we were not struggling financially, which is how we felt an acquisition decision. Crap. Cut this out, Shane. Okay, hold on. Wait, go back to that slide. Okay. So at the end of the game, we decided to go with a management buyout decision. We felt as though this was the best decision for our type of company. Overall in the game, we were a fairly successful company, and so we still want to have claim in this and capitalize on the success that we've had thus far. And with the management buyout decision, we can end up being shareholders. We did not choose an IPO decision because we did not want to become a public company. We felt that being a private company has worked out for us thus far, and we wanted to stay that way. In an acquisition decision, we felt as though that decision was geared more towards companies who were struggling financially, and that was not the case for us. Some advantages of the management buyout decision was sustainability of the company. We felt as though our company had been doing well, and we wanted to sustain that success. We also believe in the current management that we have, and that management in the decision gains ownership of the company. And so that results in smooth transitions for all of the employees in the company, and that way those employees feel very involved in the decision that we have made. It reduces uncertainty and anxiety for those employees because it's people that they already know, people that have already been on the management team, and that way we can kind of go into a smooth transition and have further success in that company. And we felt as though it was sensible options for banks, venture capitalists, and investors in the company. The only thing we're kind of worried about in the management decision, though, is that the management team may not have the funds to buy out the company for what we're selling it for. That way they may have difficulty with loans to try to buy the company out. And struggles with the management team that we already have had may still remain when they become owners of the company. And founders, so we will not manage the company on a day-to-day basis. That might change the atmosphere of the company and might result negatively. So in year 11, our net worth ended up being $163,629. That comes from subtracting our total liabilities from our total assets. However, in year 19, our net worth ended up being $526,229. In that case, our growth in just 9 short years was a difference of $362,600. Because of that growth, we decided to sell our company for $900,000 to our management team. We want that to happen in year 22, and we will not have any change in facility as far as implementation of this plan goes. That way, if management team wants to change facilities, that's going to be their decision to make as current owners of the company.
That was good.
Bad.
No, it wasn't. No,
Okay.
honestly, it wasn't.
Okay.
It really wasn't.
I don't want to do that because that was so friggin' long.
Yeah, and like compared to Jess, like you didn't say a lot.
I didn't? Okay. I felt like I stumbled a lot.
Let's see how much percent battery's left, because maybe I can just go and film it right now.
You think so? Okay.
Well, let's.
Are you gonna climb over? Just do it.
Yeah, these are sturdy tables.
I would do
The
it.
ones in
How much is left?
Oh, plenty. I don't know where the percentage is, but there's 2 things left.
Okay. You want to do it real quick?
Yeah. I haven't even really looked at those.
Oh crap. Can you see me though?
Keyboard.
Okay.
Sliding all over. Oh my gosh, not at all.
Okay, cool. Where's my phone at?
No, I have 3 slides. You'll be here for like 2 minutes. I don't know if you can see it.
Can you read
You
this?
might
'Cause
have
it
to
was so
check-
blurry for me.
Shit, no.
See, it was so blurry for me, and I have contacts in.
Lots of shit.
I noticed that instead of investors, it said inventors.
Yeah, it did.
It's alright though. Whatever.
I don't know if you can, if the light's in my face, that's, you may
You
have to
just
check.
said, no, you're fine. Just don't stand in front of that dot and you're good. Whenever you're ready.
I don't know if I can read this.
You can.
Strong advertising budget, lots of shoe metals, plant upgrade and expansions. Invested in our employees, upper tier and
I was sweating. I got nervous. I think I would have felt better if everybody was here.
quarter shoe. Okay,
Good?
yeah.
Ready?
Overall in the game for Great Solutions, we had some strengths, weaknesses, opportunities, and threats as well. For some of our strengths, we had... What?
Spit your gum out.
Oh my gosh.
I could hear it.
Oh my gosh.
Alyssa,
We knew this was
I
gonna
just
happen.
saved your life.
Oh my gosh, God.
Shane, don't judge us.
I would have gotten through like all of it and you would have been like,
Okay, ready?
okay. Overall for Great Solutions, we had, oh my god.
At least I caught it super early. Okay.
Okay,
Get
don't
your
talk
shit
to me
together.
about
I
anymore,
won't.
like sit down.
Okay.
Overall for our company, we had some strengths, weaknesses, opportunities, and threats. Some of our strengths included our strong advertising budget. We had a lot of shoe models which were great for our customers to choose from, gave them a lot of choices, and helped us out a lot in the long run. We were consistently profitable, unlike some of our competitors who were profitable some other years and in the next not profitable at all, so we were good in being consistent with that. We did well with our plant upgrades and expansions. We were above average for all of our rebates. We had low costs, which were good for our customers, and we invested a lot in our employees. We were upper tier in terms of our overall branded and internet market shares. However, we did have some weaknesses, like every company does. We had a poor distributing plan. We had a lack of celebrity appeal, which kind of hurt us for our advertising. We didn't have perks with our delivery time, which was a problem for us for a majority of the years. We did not take any major risks, which if we had, we might have done far beyond what we did in terms of strengths. However, we did not. We didn't look much into our stock options, and we didn't have any private label bids, as well as we had a lack of social responsibility. However, for our opportunities, we did have some plant capacity expansions. Overall, we had a growth in the market share with our internet and branded segments. And
Wait, do opportunities again because it's we could have, not we didn't. You know what I mean?
yes.
Okay, do it again. Just the opportunities,
Well, should I just start from the beginning?
if you want to.
I feel like it's hard to just like cut it all out.
Okay, just start
Okay.
from the beginning.
One more time.
Sorry, Jane.
Yeah, sorry. I feel like I need to take a sip of water.
Take a sip of.
Nah. This is a long one. I hate it.
I know. You only have 3 slides. I have 13.
Yeah, okay. For Great Solutions, we had some strengths, weaknesses, opportunities, and threats with our company. Some of our strengths included our strong advertising budget. We had a lot of shoe models which were great for our customers to be able to choose from. We were consistently profitable, unlike some of our competitors who were profitable in one year, not profitable the next, and they kind of were shaky. However, we were very consistent with that. We had great plant upgrades and expansions. We went above average with our rebates, and we had low costs. We invested a lot in our employees, and we were upper tier in terms of overall branded and internet market segments. However, we did have some weaknesses, like every company has. We had a poor distribution plan and a lack of celebrity appeal, which if we had better celebrity, we could have had better advertising. We did not have any perks with our delivery time. That was a problem with us for a majority of our years. and we did not take any major risks. However, if we had made some major risks, we could have profited a lot more from it. We did not look much into stock options, and we didn't have any private label bids. And the last of our weaknesses was our lack of social responsibility. Our opportunities, we could have expanded with our plant capacity. We could have grown in the market share with our internet and branded segments. And we could have had some additional plant upgrades. Our threats were included competition for celebrities with other companies. That was a big for us. The other competing companies had better shoe prices as well as better shoe ratings. And our delivery time was average, where it could have been a little bit quicker. And other lower cost companies were a big threat to Great Solutions. As a team, we learned many lessons. For the most part, we wanted to make sure that it was important to keep an eye on other teams and their market and the companies, how they did overall. Making sure to watch closely the decisions that they made in order to base our decisions off of how well they did. We wanted to maintain positive operating numbers, and we wanted to make sure that we bought capacity every year instead of building, because it was a cheaper option for Great Solutions. As a team, we learned that it's important to have incentives, rebates, and fast shipping. It looks well for our customers, and they truly appreciate that, and it's better incentive for them to come to our company rather than competing companies. And we wanted to maintain satisfactory distribution levels. We also wanted to pay attention to celebrity appeal. It is important that your customers can relate to the celebrity that is endorsing you. So we wanted to make sure we chose a celebrity that was perfect for our company and would be comfortable in our shoe. We wanted to keep our plant upgrades and keep our production costs low, and make sure to clear our inventory so that we don't have an overstock in that. And we wanted to pay attention to trends and exchange rates. And the last lesson that we learned was to maintain our advertising to increase our market share. As individuals, we learned lessons as well. We wanted to make sure that we collaborate with each other, because communication is success, and if you don't have good communication throughout your entire time of working together, it's going to be very hectic, and there is going to be a lot of chaos within the game. Each person as an individual has different strengths, and so we made sure that we focused on each of our team members' strengths and worked off of them. We wanted to stay organized throughout the semester, so we learned that keeping a binder really helps. Keeping all your information and printing out all of your results, keeping it stored in one place is very helpful when trying to get all your information together and gather it throughout the game. Being flexible and adapting to different changes or situations that come up is also a lesson that we learned, because it helps things run smoother if you're easily adaptable to situations that may occur, and to be prepared for anything that could happen. And then we also learned that holding each other accountable for all responsibilities is something that's really important, and it will help ease a lot of the problems that may come up. And I hope you enjoyed our, I don't know.
Okay.
Never mind. I feel like I should end it with something.
Maybe we can end it as a team. Who knows?
That's good.
Yeah. Okay. Wait, check the video, because I pressed the button and I looked up and the SWAT was there, but that was me pressing the button. So did we have the SWAT open the whole time you talked about SWAT? You know?
Oh, I don't know.
I don't know. How do I work this?
I feel like I did really bad.
No, you didn't.
Are you sure?
Yeah.
I don't know. I feel really weird.
Wait, how do I unrecord?
No.
Do I press the screen? No.